What do you make of that number?
So I think you hit it spot on. It was really a transportation story, and you want to look at the guts of the report. And if you look at the guts, core capital goods orders minus 0.5%, core capital goods shipments only 0.1%. It was actually soft when you look at the underlying details in terms of what it means for business investment and equipment. So take out that noise in the headline number from transportation, that's largely airlines, and the guts of the report are actually a little bit softer. Why? Well, it's clearly noisy data. Core capital goods orders last month was 1.5%. So on a month-to-month basis, you get these moves. So I wouldn't read too much into it. Generally speaking, the trend for business investment has been pretty robust. So I think we're still fine here. And if you look at the GDP number for Q2, 4.2%. Within that, business investment looks strong. We're tracking another strong number for business investment in Q3, even with the little bit soft numbers for August. So I wouldn't get too worried about it. But I do think it's important to remember that the headline number is a little bit of a misleading indicator relative to the guts of the report.
So, Michelle, either explain or speculate, depending on the durable goods order, and you say it's transportation. Is that likely to be a timing issue?
So for transportation, it's just the headline number is almost always noise because part of it has to do with Boeing orders, which is a very big component. So that's why we always look past the headline and we focus on core capital goods orders. That's the proxy for business investment. But even within that, you get a lot of noise. So I always look at a 3-month moving average. If you do that, you see something like 0.5 to 0.7% month-on-month gains, which is pretty steady.
So I brought it up earlier in terms of the inventories as well, because you saw inventories for wholesale as well as retail rise more than expected and sequentially as well. Is that the trade conversation?
Yeah, and so for inventories, that I think is going to be a really fascinating story as we look ahead to the end of the year because Q2 inventories were very lean. So that sets the stage for inventory restocking into Q3 and into Q4. And then on top of that, the trade story, a lot of companies are going to want to get their inventories in. They're going to want to get the imports in before you have further increases from tariffs. So I think you can actually see a pretty big pickup in inventories into the end of the year, in part because of these distortions as a result of companies trying to time when they get their goods in before these tariffs kick in.